Hello all, and welcome to the BDR Group Cybersecurity is Cybersecurity Insurance Enough Protection webinar. I'm joined by a couple of chaps from the cyber insurance industry that we'll be having a panel discussion with later on, after we just run through the quick introduction as to BDR's perspective on cyber insurance and the current state of the industry. If you go to the next slide, please. We're going to be focusing on readiness rather than just fear. So we're going to try and give you some key takeaways, some things that we've learned as we've had cyber incidents and been working with cyber insurance companies. We're going to try and give you a clear understanding of what insurers expect and how modern attacks are unfolding and how we're seeing the current cyber threats within your businesses. We're trying to give you actionable steps that out the back of this meeting you can take back to the board, have discussions with your colleagues, and really understand what's going on in the wider industry. From our perspective, cyber insurance isn't a silver bullet. It doesn't stop your systems going down. It doesn't stop your data from being encrypted. It doesn't stop the actual damage that comes from a cyber attack, whether it's reputational, whether it's commercial. A lot of cyber insurance claims are denied as well. There's a lot of fine print within the cyber insurance wording that you won't necessarily have read, which can deny your claim. A lot of time payouts are delayed from our perspective. Again, we're seeing more and more delays because of lack of evidence. And it takes that cyber attack generally for organizations to discover that actually the policy they had in place didn't cover them for what they expected. So you've got to make sure that you've got all of these things in place. You can go to the next slide, please. Right, so here's a brief example of what insurers are going to expect you to have in place before they even consider paying out. They're going to expect you to have multi-factor authentication enabled across your estate. So not just on one or two applications, they want it on every device, on every system that you use. Even that little software as a service application that does your printing, for argument's sake. Anywhere that there is data that can be breached, they're going to expect you to have multi-factor authentication in place. They're going to expect you to have telemetry, information, logs, and data from all of your systems. So whether that's an MXDR engine that's ingesting all of that data, or a SIEM engine, or a security operations center, after the attack, they're going to expect you to be able to give them all of the data as to what happened and when it happened, so that they can uncover where that risk came from and whether it was something that was protected, wasn't protected, or whether you said you had something in place that you didn't have in place. They're going to want that. They need a documented and tested incident response plan. And they're going to ask you for this. And more, you're going to see this coming through into your mailbox whenever you renew that cyber insurance policy. They're going to be asking you, fine, what are you going to do in the event of a cyber incident? And does everybody know that that exists? Have you done things like a tabletop exercise with all of the board members and the people involved in that cyber incident response plan? And how often have you tested that? They're going to want evidence around your staff training. Do you have a policy in place? Are you following that policy? Do you have your staff trained on a regular basis? And where is that information being kept? And a lot of this information is critical to make sure that if you ever do have a cyber incident, you've got all of that in a single location so that you can show the cyber insurance company that these things have been taking place. They're going to expect you to follow the 3-2-1 rule. So making sure you have at least 3 copies of your data using 2 different applications and at least one of them being off-site. They're going to want that these are immutable as well. So even if you do get ransomware, that those backups can't be corrupted, deleted, removed, they are going to expect you to have that in place, and that can even be part of the policies that they look at putting in place. Next slide, please. So the main hidden gaps that we see are human error not always being covered. So if it was an internal employee that actually exfilled your data and did it intentionally, does your cyber insurance cover you for that? Have you checked? Because if you haven't, potentially a major breach could end up costing you far more than you expect and taking the whole business down with you. Are you sending out the third-party supplier questionnaires to your suppliers to make sure that they also have the correct security and standards in place? Because again, if one of your third parties breached and that's the attack that comes into your organization, some cyber insurers will say, well, that's the third party, that's not yourselves. We do not cover that element. Ensuring that you don't have unsupported systems or unpatched software. If you have unsupported systems, if you have unpatched software or software that was written by somebody 30 years ago and unfortunately has never been patched since, unfortunately, if that's the cause of that cyber attack, the cyber insurance company will say, you aren't adhering to your side of this policy. And then the failure to follow the mandatory post-breach protocols. Your cyber insurer will generally define what they expect you to do post-breach, whether you're contacting the ICO first or whether you contact them first, whether they manage your communications or whether you manage your communications internally, whether you can decide who does your cyber incident response or it has to be somebody defined by the cyber insurance broker. So if you breach those policies, again, potentially it could lead to a non-payout. If you go to the next slide, please. This is just a traditional attack method that we're going to go through, and we're going to explain how potentially the attack can unfold and what you can put in place to mitigate those attack vectors. So the traditional kind of attack will be through a phishing or credential theft. So sending through an email, which is asking you to authenticate via your Microsoft 365 account. You've probably had a few of these yourselves, hopefully not, but you click through the link, ask for username, password, looks just like your Microsoft login. You type in all your credentials, maybe even your multi-factor authentication token. Great, you just gave somebody access to your account without knowing it. What the attackers will then do is try and use that as a road into your systems and try and escalate their privileges. If you aren't a privileged account, they will try and escalate in some methodology to find a more privileged account which has access to more data. From that point, they'll move laterally across your network. They'll find out what information you have, where you store it, how you back it up, how long those backup policies are for. And then at that point, they'll try and encrypt those backups if they are not immutable. If they are immutable and you've got a relatively short retention period, they might wait out the retention period because they'll inject ransomware and wait for that retention period to run out. So in spite of your backups being immutable, they've still infiltrated all of your backups so that when you do restore the data, it's still potentially compromised. They'll make sure that they exfil the data. They take all of the data, they copy it onto Google Cloud, they copy it into SharePoint, they copy it into OneDrive, they copy it into some tertiary location that they have access to that data, and they'll use that to leverage the ransom. At that point, they'll pull the trigger on the encryption of all of your devices, all of your data. They'll start causing disruption to your organization and issue the ransomware demand letter. And at that point, your data's been exfilled. They're going to threaten to publicize it on the web, depending on how sensitive that data is, depends on how much that's going to impact you as a business. They will have encrypted all your data and potentially your backups, depending on whether they are mutable or not. To mitigate this, you need to make sure that you take care of the people, the processes, and the technology. So make sure that you have that phishing training, that security awareness training, and a good email security product there, trying to prevent these from getting through to your organizations. These days, they might not necessarily be via email. It could be via WhatsApp. It could be via a telephone call. It could be via a Teams meeting, trying to deepfake impersonate your CEO, your CTO, whoever it might be. Having privileged access management and managed threat detection and response across your entire organization will give that visibility of those potential attackers sitting on your systems, looking for data, looking for information, trying to exfil that side of things. If you've got a SIEM and a SOC detecting and nullifying any threats, they will see when attackers are moving across your network and potentially lock it completely down to prevent that spread across the network. Make sure that you've got a 3-2-1 rule in place and that the backups are immutable, so then they can't remove them. And the longer you can have that retention period, the better. To stop the data from being exfilled, a strong DLP policy being in place and making sure that that DLP policy also feeds into your SIEM engine so that you've got the data about any potential exfills of that data. If you've ever got to that final stage, odds are you don't have everything in place that we mentioned before, or they found a 0-day vulnerability. You can go to the next slide, please, Samir. What does the first 24 to 72 hours really look like? If you don't have a cyber incident response, we see there's no clear ownership of decisions. People are trying to figure out on the spot, what do we do? How are we going to deal with this? The confusion about, do we contact the regulators first? Do we contact the insurers first? Do we even have a responsibility to contact the insurers or the regulators at this point? They don't have the logs collected. They don't have a single pane of glass to ingest all of this data. Nobody knows what's going on. If the backups haven't been tested, or worse, they've been encrypted too, again, panic sets in. They're trying to figure out, right, do we actually start paying these guys now? We see a lot of staff blindly stopping working, going home, maybe going to McDonald's, whatever it might be, and there's just no coordination. This is why your cyber incident response plan is so critical, because this is actually more common than you would expect within businesses, especially businesses who don't have a lot of compliance and regulation around them. Samir, if you can skip to the next slide, please. So what do insurers actually want to see? They want to see a strong cyber incident response plan. It's not a nice to have, it's a requirement. Defining the roles and responsibilities. Who gets contacted, for what, and why? What are the escalation paths? How do we define what a cyber incident is and who needs to be involved depending on the scope and the scale of that cyber incident? If somebody just gets a phishing email and they delete it, you're not going to trigger this whole plan. Now, understand at what point who gets involved and why. You need to understand your communication with your staff members, customers, regulators, and insurers. So at what point do we contact our staff members? What information do we give them? At what point do we contact our customers? And what information are we feeding to them? Are news outlets potentially going to be interested in this? And what is our marketing strategy around this to make sure that it doesn't cause reputational damage? At which point are we contacting the regulators, and at which point are we contacting the insurers? How are we going to make sure that we're collecting all of the evidence correctly? And how are we going to contain this breach, and how are we going to make sure that we recover after this seamlessly and we don't end up losing our organization over this cyber insurance or cybersecurity incident? Next slide, please, Samir. The real financial impact of an unprepared business has been seen many times. You've seen it, probably the worst outcome was the knights of old, who were 150 years old. They were quite a large organization. They'd survived 2 world wars and 3 massive recessions, and it took one cyber incident to take the entire company down. Unfortunately, it does happen. So if you can't operate, your sales stop, your customer service stops, your revenue stops, and your reputational damage starts from that point, and people find other avenues. As happened with Knights of Old, at that point, people just started using other logistics firms. So again, what does yours look like? How quickly could companies find another way of achieving what you do for them if you can't fulfill their requirements and their needs. This is the true impact of a cyber incident, ignoring all of the other side. Zamir, if you can go to the next slide, please. So what you need to do is really build a cyber posture that the insurers can trust. Make sure you've got that people, process, and technology in place. Show that you are mature as an organization and that you understand the cyber threat. If you do that, you're going to get lower premiums, you're going to get higher coverage levels, you're going to get faster payouts because you've already supplied all the information required, and you're going to get fewer disputes because you've already ticked all of the boxes. This is where you can be a responsible organization in making sure that you've got all of this in place ahead of any cyber incident. Samira, if you can skip to the next slide, please. Cyber insurance needs to be part of a wider risk strategy. Cyber insurance is one piece of the puzzle. You need to think about your prevention, your detection, your response, your recovery, and your continuous improvement, and perpetually going around in these cycles. We suggest biannually that you review your cyber incident response plan, your business continuity and disaster recovery plan, and your wider risk strategy to understand where are we currently, how much of a risk do we have, and have we got everything in place to make sure that we can mitigate this going forwards. Your strategy should aim to keep your business functioning as much as is humanly possible, even during a cyber incident, so that you can still be bringing in revenue and you've got the money coming through that front door and you're not causing customers to look elsewhere to procure their services and products that you would be providing them. If you can skip to the next slide, please, Amir. Underwriters now have deeply technical personnel on hand. Originally, when we first started seeing those cybersecurity questionnaires coming from these cyber insurers, it was quite obvious they potentially didn't have all their ducks in a row and didn't understand the technicalities of what they're doing. As this has become a more and more mature product, we're seeing more and more technically detailed cyber insurance questionnaires, and the understanding is becoming greater. The questionnaires are becoming more and more detailed. They're getting to the point where they're asking, are you passing these questionnaires onto your third-party suppliers, as we mentioned earlier? The premiums are rising sharply, especially for any business that doesn't have privileged access management, doesn't have a proper business continuity and disaster recovery plan, or managed threat detection and response, and all of those logs. More claims are being contested, and that's causing serious issues for businesses that do think they are covered by the cyber insurance, but don't necessarily have everything on the back end that they believe they should have. Demonstrable reliance is now the decision maker. So making sure that you do have everything that we've just mentioned before is the most critical thing you can do for your business tomorrow. Where, if you can go to the next slide, please. As I said, these are our key takeaways that we want you to walk away with today. Cyber insurance won't stop an attack. Cyber insurance is there as a recovery net. It's there to try and stop your business from potentially going under due to a cyber attack. Insurers do expect you to have strong controls in place. They're not there as a catch-all. If you don't have those controls in place, odds are you may not have that payout, and all of that cover that you thought you had may not flow through. Most businesses do overestimate what their policy is covering and haven't gone down into that finite detail to understand, is it ticking all of the boxes that we expected it to? Preparation determines your claim success, the downtime, and the speed that you can recover. And resilience beats reliance on your cyber insurance every time. So make sure you have that resilience in place so you're not relying on your cyber insurance. Okay. Samir, next slide, please. So if you would like us to do a free posture report on your cyber check, please feel free to scan the link up there. We'll send one of our experts out. They'll do a complete gap analysis as to where you are currently, where you potentially should be, align you against the major standards of GDPR, ISO 27001 at Cyber Essentials, so that you can understand where you currently are and how you could potentially make improvements. All right. Samira, you can go on to the next slide, please. So this is where we get into the panel discussion. So I'd love to welcome our two colleagues from Baker Jane. So if you want to do your introductions, Adam.
Yeah, hi, I'm Adam Baker. I'm the Managing Director of Baker Jane Insurance Brokers. I've been in the industry since I was 19 years old, so yeah, pretty much man and boy. But we're a general insurance broker, and yeah, we literally cover anything that is needed insurance-wise.
Hi, good afternoon, everybody. My name is Stuart Pigram. I'm working alongside Adam within Baker Jane. I'm responsible for the development of the business as well as for the majority of our high-level client management. And yes, as Adam says, as general insurance brokers, but very much, perhaps over the last decade, a bit of focus on cyber insurance. So hopefully we can add some value to this discussion.
Perfect, brilliant. So, Adam, what are the most common misunderstandings organizations have about cyber insurance when they come to you?
I think the one thing that is pretty prevalent is that there's an assumption that it covers everything, when obviously it's not. It will be very defined. It's very much about the various levels of cover. You can select the levels of cover. You can adjust the cover. There might be some things that are irrelevant to you, but there are other things that are very important in your mind. So I think that's one of the major ones for us, is that people just assume it covers every aspect. Well, you know, it doesn't, and it can't. And there are different insurers that are happy to do all aspects, but there are other insurers that say, no, we won't go into that arena, or our policy isn't designed to pick up that element of cover requirement.
Okay, fantastic. And Stuart, at what point does the insurer decide an organization is effectively uninsurable, and what typically leads to that kind of a decision?
You mentioned earlier on about pricing, and obviously pricing is very sensitive, and very, very infrequently is a business uninsurable in entirety. However, insurers, rather than looking at perhaps specific technology or specific processes, may look at the kind of moral risk, as it's considered, of a business. You mentioned in your piece there the value of process, the value of training, the value of understanding. If there is no understanding, or there is no perception of a client wanting to manage or control their own risk, that is much more likely to make them uninsurable, rather than anything relating to their business type or their business activity.
Okay, that's interesting. That's a good point. So, Adam, which questions on modern cyber insurance proposal forms cause the most difficulty for small to mid-size organizations, would you say?
I think there's it very much depends on the organization, because you sometimes you'll be speaking to the managing director who doesn't understand the IT, because that's not their remit. And then sometimes you speak to the IT person and they'll say, yes, we've got X, Y, and Z, but they may or may not have it. So I think sometimes there's a bit of a trust issue between the two, because one thinks, yes, we've got everything covered off. The other one says, we might do, but I don't think we've got everything that you might need. And I think sometimes that's very difficult, getting the correct answers on the proposal form, and having that true understanding. So I think the most important thing is getting that form completed by the right person, if a form is required, so that they can actually answer it fully and to the best of their knowledge and belief, really.
Okay, brilliant. Thanks for that. Stuart, how often do you see organizations believe certain controls are in place only for underwriters to disagree? And why does that gap exist, and how often do you see this?
I think you mentioned again earlier on in terms of underwriters or insurers becoming more technically aware, or becoming much more technically advanced. And you're absolutely right that proposal forms from a number of years ago would have asked a number of irrelevant perhaps questions, because insurers at that point were simply trying to gather data and gather information on this new market that we were entering into. I think the control thing really is not dissimilar to the question you asked Adam, really, in terms of if it is if it's a situation where the board has created a marvelous cyber incident plan or a marvelous plan, but it's not been delivered down through the business, then there will be an underwriter disagreeing. And you mentioned equally earlier on that an underwriter would like to see those plans and processes being tested, and confirmation confirmation and proof that that's actually happening. So the controls, it's all well and good saying that controls are in place, but are they being driven down throughout the business? So it's a very, very similar response, I guess.
Yeah, absolutely. And I'm glad you agree with us on that. Brilliant. Are there any specific controls today that are effectively non-negotiable for cover, regardless of the size or sector of the organization? That's an open question to either.
Want me to take this one?
Yeah.
I think one of the things that we would say is it can vary by insurer, and we often feel like politicians because people ask what's a general question, and we don't give a direct answer, because some insurers say if you don't have the MFAs done, if you don't have this done, then there's no cover. Other insurers are a little bit more relaxed because they appreciate that you've done it for 11 months of the year, and on the 12th month it's just not there, whatever the patch update might be, or the download isn't in place, etc. So it can vary by insurer. It can vary by the customer, because you talked about earlier on evidencing logs. Well, if you've got 59 logs of something, but on the 60th one you didn't do it, and that's when you've had an attack or an issue, it would be very hard for an insurer to knock back a claim. So, it's that kind of thought process that insurers do look at the risk. They do look at how well managed the business is. So I think, from that perspective, there's not a set answer, and that's our frustration. We're the middlemen between us and insurers, and we're the ones trying to interpret what insurers are really after, but also saying to you, you can just do the best you can do, and sometimes even then they'll get past what you're trying to achieve or what you're trying to do, and then we've got to try and get insurers to obviously pay out accordingly, really.
Oh, absolutely. I mean, yeah, you're very right. A very political response. I guess if there was one, then we could stick that as the highlight of all of this. From an insurance perspective, what would you say are the most critical steps an organization should take after a cyber incident? And I'm going to leave these open as to who you want to answer these.
Yeah. I'll take that on. First steps. So you've put in your presentation what, from an IT perspective, we would expect to do to understand, to realize that this attack is actually happening, and whether we're informing insurers, whether we're informing ICO, whether we've got a safety issue, whether we've got a communicative issue. One of the things that really, when we look at a risk for a business, it's probably exactly the same process as you carry out initially. It's a fact find. It's an understanding the business, where the business sits. And so in answering that question a long way round rather than politically, is the first steps when an incident occurs by some insurers could be managed by them. We work with a number of insurers who provide a real ground up service. They do engage and retain IT experts. They do engage and retain PR experts. They do help from a legal point of view in terms of notification. So the first steps, as we've said, are understanding what's going on, retaining logs, making sure we've got access to data, etc., etc. But rather than advising any of our guests here as to what to do, in a number of scenarios with a number of insurers, particularly those that we're engaging with, a lot of that will be taken from them. And remember that it's very much in the insurer's interest to manage that first golden hours or 24, 72 hours, because in the event of that ultimately leading to a costly business interruption loss or a costly liability claim, it's them that's liable to meet it. So it's in everybody's interest to act early and to act properly.
Okay. So would you say probably the first step is to contact your insurer if you believe you are in a cyber incident?
In the event, and again, depending on the type of policy you're buying. And this is where this makes this really quite difficult, because if you are buying a cyber liability policy, which will simply cover you for your legal liability relating to a financial loss to a third party, then the first thing you need to do is contain that loss. And whether it's an Information Commissioner's Office, whether it's a regulatory report, that needs to be done. And similarly to how we would look at a general insurance claim, I'm sure we've all got houses, cars, and businesses around the room, and you would, in the event of something happening to those, the first thing you would do is to contain your security yourself. So, in part, again, it would be you're obligated to mitigate your loss, to control your loss, and to act in the best interest of everybody engaged. But that can be assisted by a more comprehensive insurance program.
Okay, fantastic. And what mistakes have you seen customers making in the first 24 to 72 hours that potentially later put their claims at risk?
It could be relating to wiping systems. It could be relating to rebuilding systems too early, not holding the log in exactly the same way. And without getting technical in terms of this, because I'm a million miles away from being technical, but is in exactly the same way as, when you are putting forward an insurance claim for a motor accident or for a property claim, you're retaining estimates, you're taking information at the time of the loss, you're taking evidence from witnesses, etc., etc. So it's basically making sure that if you are acting on your own and you don't have the full breadth of cover from an insurer, that you are acting as if you are uninsured. And what would you do? You would make sure that you're retaining as much information and data to enable you to defend that claim at a point in which it comes.
Okay,
Can I just add to that? There's two things that insurers always go on about to us, if you like. One of them is the loss mitigation side. So you have a duty to mitigate all losses at all times and keep costs down, etc., which you're going to do anyway, whether you're insured or not insured. The other one is acting in a manner that prejudices their position, which again is quite a bit of a catch-all. That, well, hang on, I did this with the best of intent, and now you're telling me I've impacted what you were able to do or not able to do. So we would sometimes say to a client, look, if you know you've got a cyber incident, or you suspect you've got a cyber incident, and you've got an inbuilt IT person, or you have some consultants that you can deal with, mothball your system, try and ring fence it to keep everything as it is intact and not accessible. And if you're going to start again, then start again, because everything you need should be there to evidence to an insurer, to prove, to show, etc., etc. So that's, I think, you can get away with a lot of things under loss mitigation. So if you say to an insurer, look, I did everything I could do to mitigate my loss, now you're telling me I'm now prejudicing your position. Well, which one is it? Because I can't do both sometimes. Sometimes I had to do something to get to the loss mitigation, but I didn't know it was going to prejudice your position. So, yeah, I think just being aware that those two things tend to be there for most insurers is probably a good starting point, if that makes sense.
Okay, so potentially leaving the systems that have been compromised dark and running in parallel with new live systems could be a way of mitigating that, so that you've still got that legacy data.
Well, you still get access to it, yep.
Absolutely.
And forensically, you can pick it apart. You can go and see how they've got to where they've got to, because that would then help you for a future. If there's another backdoor system that they can get into, well, actually, that's how they got in. We need to see what that is. We can fix that. We can close that loop off.
Brilliant. Okay. So how closely do insurers examine whether incident response plans and backups actually work rather than just existing on paper? Do they ever test these things?
I think, Owen, again, you mentioned, this is, I guess, the second point where we're going to agree, that it is these plans, similarly to any business continuity plan, any disaster recovery plan, is only as good as it is current, and it's only as good as it having been tested. So yes, insurers are, in all honesty, are unlikely to scrutinise any plans during the process of a policy year. They may well want to scrutinise and engage with those plans in the event of an incident. Was it usable? Was it current? Has it been exercised? are we able to rely on it? Because ultimately, going back to, we're getting a bit of a recurring theme here regarding mitigating that loss, minimizing that exposure. Any assistance that recovery plan can give us will ultimately reduce the exposure, reduce the cost of the claim, ultimately, and inherently, therefore, the impact on the business. So I would, it is being scrutinised. It would be in the event of a claim, but I couldn't agree more in terms of the value of that process plan, incident recovery plan, being managed, being tested, and being driven throughout the business.
Okay, fantastic. Just a heads up, we're going to do the Q&A questions. I've seen a few popping in. After this, there's another section. So I'm just going to go through my panel questions, and then we'll follow into Q&A. So feel free to chuck all the questions into Q&A. We'll get through as many as we can after this point. So my next question is, how do factors like data exfiltration, sanctions, or repeat extortion attempts complicate claims and decision making? So does it really impact a customer if they've only been hit once, or if they've been hit multiple times? I know it'll increase their premium, but how is that seen in the industry?
I think perhaps again you can realign this to an earlier statement I made with regard to the moral risk that an insurer would look at. Equally, and hopefully this is helping in terms of bringing this type of insurance policy into a more commonly bought policy. Let's use a motor claim. If you have 3 motor claims in a year doing the same thing, your insurance premium is going to go up. If that continues and you don't learn from your mistakes, then your insurers are going to ultimately decline to insure you. So the multi-dimensional claim that is continual is going to complicate itself, but also ultimately is going to make your ability to acquire insurance in the future more difficult.
Yeah.
Okay. And
there is an insurer that has a warranty or a condition that if you've already had an extortion event, they won't pay for a second one.
Interesting.
So that's where some insurers are differing to other insurers.
Okay, that is interesting. If an organization wants to improve its chances of getting cover or having better terms, where do you believe they should focus the most?
I think it's twofold. I think there's the software hardware perspective, and I also think it's that disaster recovery piece, because where you've got, traditionally a fire, as an example, would take out a complete building. All the IT is gone. You've got to start the building afresh. You've got to start all the IT afresh. With cyber, there is a natural point at which recovering the IT systems from a fire and recovering from a cyber is the same. So if you have a good disaster recovery plan in place, that can sometimes just dovetail across to your cyber, and most of the work is already done and there for you. And I think the other thing to think about is that we are seeing such an increase in cyber, some state funded, if that makes sense. There's a lot more cyber attacks going on. GCHQ come out with a report recently that said that there's been a 40% fold increase in the last 6 months to a year and a half. There's more of a chance of getting a cyber attack now than there is a fire. But people are more than happy to insure for the fire aspect, but not necessarily the cyber, which is the one that's more likely to sort of be an issue for them. So that would be my and then as we talked about software and hardware, if you're not on the latest antivirus systems, if you're not doing the sort of patch controls, if you've got obsolete, the NHS had the issue a couple of years ago because they were still running Windows XP. Obviously that's a huge issue.
Absolutely. This is an absolutely loaded question, so it's going to be right up your street. How often do you think organizations should reassess their cyber insurance?
I think that, and again, I think you mentioned 6 monthly reviews of process. Obviously, an insurance policy is regularly reviewable or renewable annually. In terms of where obviously, and I guess loading the statement is our process with all of our clients or all of our prospects is to understand their business, understand their attitude toward a risk, understand their budget to protect that risk, and understand where they sit in the environment as to what we're talking about. So as far as there would not be a fix of you need to review it every month or every quarter or every half year, but in terms of your robustness and your process, going back to that, managing your hardware, software controls, managing your business continuity plan or your cyber recovery plan, those are live documents. And as your business evolves and as your business changes, whether it be through acquisition, through diversification, through any kind of change in the business, then there is an impact on your insurance program. And at that point, one would consider it needs to be reviewed.
If I can add a bit more to this one, I don't know if anyone remembers the terrorism event in Salisbury a few years ago, and Novichok poisoning. Now, back at that stage, terrorism insurance didn't include non-damage business interruption. So there wasn't an explosion, there wasn't a fire, there wasn't a bomb, but businesses were shut for a period because they just couldn't trade because of the nerve agent that was in the area. So insurers eventually adapted policies to include non-damage BI. Now, recently, last year, we had the JLR issue, and we're near Meriden, near Coventry. We're surrounded by companies in the automotive industry that were supplying JLR, who had massive shutdown periods. That was a huge impact to them. And we flagged it straight away to say there's no cyber cover here. If somebody's had a cyber event that you are supplying to, or are buying from you, what happens now? Because that's not covered on the standard policy. So they finally came out with some suppliers BI cover, and there's only one insurer at the minute that's doing that. So as part of that annual review discussion point, are you reliant upon any one company for your revenue, income, or sales? Well, we now might be able to ring fence some of that or get you some cover towards it, which wasn't there last year. So it's things like that happens in our industry. Our industry is old. Our industry has stayed. It's boring in so many areas, but it's reactive more than proactive more often than not because of new emerging risks and new emerging things that are coming up all the time.
Brilliant. All right, I've got a final question for both of you. So each one of you's got this same question. If there was one thing that you wish every board or leadership team truly understood about cyber insurance, what would it be? What would that one key takeaway be?
Okay, I think I've probably already stepped upon this in terms of when a business is looking at acquiring a service or a product or what have you, it would normally be obviously raised at board level or at senior level regarding a purchase. It is absolutely vital with regard to a cyber policy that every single person in that business, whether remote, whether within the office, whether at whatever level of seniority, is aware of the restrictions and controls that they need to put in place to ensure that the insurance continues to perform. So my single point would be that the board ensure that any practices are flooded throughout the entire business.
Okay, and Adam?
Well, I've probably got to come up with a different angle, haven't I, really? Because I think cascading that knowledge is absolutely paramount. I think the other thing to think about for the board, if they are looking at growth, if they're looking at tendering for contracts, if they are looking at new business and bringing through more turnover, is evidencing that cyber resilience to a prospective party. And that you won't be the weak link in that chain. What if you don't have the right antivirus in place and you transmit a virus to them that you're dealing with? Well, you could take them down from something that isn't their fault, etc. So yeah, I would say because Stuart's covered off the easy one, I'll do a different angle completely, and just say think about it as a new business tool. If you're Cyber Essentials or Cyber Essentials Plus, if you can show that you have an understanding of cyber and a resilience, it will make you more attractive on a tender process to companies that you're trading and dealing with.
Okay, perfect. Thank you. Right. Okay. Let's skip to the next slide, which I believe is the Q&A slide, and I'll start going from the oldest to newest. So Oliver asks, what are the requirements for following the 3-2-1 backup strategy for cloud data? Whilst we have an excellent adoption of this strategy for on-site data, and we regularly test this, but for cloud data like 365 and Google, when we're querying backup providers on their strict adherence to the 3-2-1 strategy, we're finding it difficult to ensure compliance. For example, 3 copies of the data, many cloud providers do not provide multiple copies. 2 types of media used, many cloud providers don't use multiple types of media. And 1 immutable copy, we're finding advertised immutability is not actually strictly immutable when backups for employees are automatically removed when unlicensed, so on. Okay, I'll pick up this one. Yes, yes to all of the above. You've got to devise, well, the way which we work it through with our clients is to devise a multi-cloud strategy, right? So if you are on Microsoft 365, for argument's sake, don't use Microsoft. Oh, Microsoft, please don't watch this. Don't use Microsoft for your backups. Use somebody else, right? For ourselves, we use Datto, and we've got infinite cloud retention on our Datto backups. In relation to unlicensed employees being allowed to be deleted, again, from a Datto perspective, those are kept for 30 days, but we generally have a rule around archival and how long we keep those messages and those mailboxes archived for, and whether we convert those potentially into shared mailboxes and continue to keep those backed up as shared mailbox, which won't necessarily use a license. Media types, you're correct. From a cloud perspective, you can, if you want to, you can almost do an inverse cloud backup from a cloud-based provider to on-site should you choose to. Again, you've just got to be very careful with how you're securing that data, what you're storing it on, and does it make it potentially more accessible than the cloud version. But again, you can do multiple cloud versions as well as having one of those on-premise. Yeah, so that's kind of the strategy that we use, Oliver, and I hope that answers your question. Chris asked, I work in a school. You mentioned MFA needs to be everywhere. Does that apply to all students too? Yes, it is the simple answer. From my perspective, and you guys are more than welcome to chip in after I've said this, but MFA needs to be everywhere. Anywhere there is data that needs to be secured, you need to have multi-factor authentication. I don't know what your students are putting in there. I don't know whether it's going to be personally identifiable information. I don't know whether it could cause reputation or personal damages should that leak. But really, you should be putting in place something to minimize that as best possible. From a cyber insurance perspective, I don't know if you guys have got.
Yeah, I would agree. I think in terms of, you know, the insurance isn't the be all and the end all. The insurance is there as the ultimate protection in terms of things going wrong. So I think that the multi-factor authentication is really the first trigger, as we've said, or the first notifier that insurers are going to look at. And in fact, even down to the simplest proposal forms that we have for our basic cover, I think the MFA question is the first one on it. And whether it's everybody in an organization, or in that example there, it's students that are inputting into a system, then yeah, I would totally agree.
Brilliant. Okay, Charlie brings up a point here saying, what happens if an organization does notify the regulator before notifying their insurer, or the other way around? Are there any penalties, or is there a strict order?
From an insurer point of view, it would be within a reasonable time, and obviously that depends on what impact that's going to have moving forward, going back to our statement regarding mitigation. Obviously, when there is personal data, I believe is it in the Information Commissioner's report within 14 days. In terms of a lot of things can happen within those 14 days. There is not obviously a regulatory control as far as notifying insurers. In the event that you're not covered for an incident, you don't need to report to your insurers. So you need to worry about your regulatory requirements or your legal requirements in a similar way as you would with your insurance.
There is an insurer that also said to report it to Action Fraud, because that's the UK's National Fraud Cybercrime Reporting Centre. So they might be aware of the virus, they might be aware of the issue, they may have a workaround, they might be able to help and assist you getting that problem or issue resolved. So that's a limitation on another insurer, an exclusion on another insurer, that you must you need to do this. So it's interesting that not just ICO, there's the Action Fraud and an insurer to consider. So three different companies. My view would be, whether you ring the ICO, whether you ring the insurers, I would probably do them all in the same day, just to get it out of the way, because then it's done. And then whatever the ICO says and whatever the insurer says, you can look at what's the best practice out of the two to make sure that you don't fall foul of either.
Yeah, okay. ICO is currently 72 hours last time I checked, unless that's been changed. But yeah, so absolutely just be aware of what you have to do. So it sounds like there's no reason why you can't contact both in whichever order your
Send an email to both.
Yeah, copy them both in.
Send an email to both.
Yeah.
But
okay.
I think, and just to jump in there for a second, we act as brokers, as we've identified. We are not the insurers. We're not the decision makers. So obviously, we'd welcome any discussions or any inquiries from any of the audience here. But where we would look at this with our clients is talk to us, and we'll give you that first element of advice, and we'll give you that first point of contact, hopefully from a friendly face that's working on your side as well as on the side of the insurers or the regulators.
I think the other thing to think about is you might be with an insurer that doesn't have a first response team. They may just be, as Stuart mentioned earlier on, the insurer that just says, here's an indemnity claim, here's your money. So if they do have a response team, those are the people to get onto it ASAP to try and get the issue resolved, and then you can tell the ICO straight away after.
Brilliant. All right, last question, unless anyone else posts something, is from Duke Jackson, who asks, under what circumstances might an insurer refuse to fund a ransom or certain recovery costs?
If that ransom is proven to be uneconomical, and I have personal experience in a client of mine that suffered a hack just days before Christmas, and we had a full breach response cover, which is what we're talking about in terms of that initial reaction cover, and they noticed the hack, they noticed the ransomware, there was a requirement for ransom, and the insurers did not pay the ransom. That wasn't because it wasn't insured. It was because it was seen as an uneconomical response to the claim. They engaged with, and we've said about the value of PR potentially. They engaged with PR consultants that were retained. They engaged with IT consultants that were retained, legal advisors, forensic analyzers, etc., etc. I think it was within about 20 hours of the reported incident, we had a Teams call with the 5 or 6 people that were relevant to that activity. And after a few days of investigation, and the IT guys realized that they could ring fence the data, they could control it. There was no personally sensitive data. It was all commercial data. There was less regulation around what we were talking about. And because of the fact of the work that had been put in place immediately after the incident, they did not pay the ransom. However, there was a valid insurance claim, which was in the region of £90,000 for the services that were put in place immediately after, which was considerably less than the ransom, and the business is continuing happily today and got through the process, and it was managed through. So I think obviously they wouldn't pay it equally if it wasn't covered, or you hadn't met an obligation or an endorsement, but fundamentally, going back to the previous statement of mitigating or reducing the loss, it would be managed as part of that initial breach response. And I think as we've reiterated a number of times, different insurance policies trigger at different levels of a potential claim, and I would implore that everybody look at the areas and the responses that their insurers would have in the event of a claim to see which breadth of cover, and going back to, as I said earlier on, we would be happy to be involved in a review or a discussion with anybody regarding their appetite to the risk, their control of the risk, and any budgetary restraints that we have in terms of placing the cover that works for each business individually.
Okay, we've got time for one last very quick question. So if you guys can be relatively brief on this, but it's quite an in-depth one. Reese Morris says, we have a large amount of data stored with a provider we use. This data can be very sensitive. We access their systems via remote desktop. If a cyber attack would happen for this provider and our data would be affected, in your experience, Adam or Stuart, would we be covered under their insurance, or would we have to rely on our own? This could also cause a huge amount of downtime for us on top of this. Would we be covered?
Can I be a politician?
No.
It will depend. It will depend on the contractual relationship between you and the company holding the data. It will depend on who is defined under the ICO as a data controller. I'm assuming it's your data, therefore you should be the data controller. There might be a contractual aspect where you can hold the third party responsible for it. I think an initial stance with most insurers who have the right of subrogation on the policy is that they will respond for you as you're the engaged party, if you like, and then they would look to subrogate against the third party in the event that they've breached their contract in keeping that data stored and protected and all the rest of it. What I would say about that is, depending on the sensitivity of the data and the information, under the ICO, if it's data about private individuals, not businesses, if it's medical information, if it's financial information, you have to write to every single person to let them know that there's been a data breach. Obviously, the cost of that, if you've got, 100,000 names, addresses, people, the cost of that can be quite sizable. And that's where I would say to somebody, think about the GDPR aspect of your policy and the size of the response and the cost involved. You could be looking at £500,000 plus to envelope, letters, stamps, etc., and write out to those people. So, that's where my initial response would be. I don't know if you've got anything to add to that.
No, I think
we're pretty much out of time, guys.
Just
as a heads up. Sorry, look, it's been a very engaging session, and thank you. I've seen a couple more questions, and we'll try and answer outside of this forum on those. Zamir, if you can go to the next slide, please. So look, if you do want to book your spot on the next webinar, which we're doing, it's the insider session on shadow AI, what's creeping into your company right now. Some examples of where AI we're seeing spreading more and more across companies, and they're not aware of their employees inputting data into AI and causing potential large-scale breaches for their companies. Please scan that QR code. We'd love for you to join us again. And all that's left really, Zamir, last slide is to say thank you. Thank you for all attending. It's been a pleasure. And hopefully we'll see you all soon.
Thank you.
Thank you. Thank you very much.